Hey everyone, how are you doing? Welcome to Bite-Sized Crypto. In the last few videos, I talked a lot about high energy prices, inflation, government's money printing, and the possibility of another major financial crisis, and how all of this leads to the conclusion that Bitcoin serves as a life raft for investors to protect their wealth in the coming months and years. But when is the best time to buy Bitcoin? In this video, I will show you the results of 4 different dollar cost average methods. What is dollar cost averaging? Basically, it means to invest the same amount of money in the same cryptocurrency or token at predefined times, and by doing so, buying them at relatively low prices. Let's look at 4 different ways how to do that. The first one is to buy on a fixed day every month. This is the most straightforward way to dollar cost average. It's very easy to implement, just spend a fixed amount of money to buy Bitcoin on the same day of every month. Here's an example for how much you would have made using this method. I try to always use the same time period, which is for the last 5 years, and in this example from September 2017 to August 2022, you would have made 60 purchases for $100, equaling a total investment of $6,000, and you would have sold them for a total value of a little bit more than $14,000, which is a return of investment of 135%. The advantage of this method lies in its simplicity. It is pretty much fire and forget, as you don't have to pay any attention to price levels. You just keep on buying until the moment you sell. The second method to dollar cost average is to buy when the monthly price has closed negatively. Using this method, you buy Bitcoin on the first day following a red month. Like this, you buy when prices are at a relative low. In our example over the last 5 years, you would have made 31 purchases, which would equal a total investment of $3,100. You would have sold for close to $7,000, which equals a return of investment of about 120%. So as you can see, this method is also quite simple, and the return of investment is pretty good as well. The third method to dollar cost average is to buy when the Bitcoin Fear and Greed Index reaches a low level. The Bitcoin Fear and Greed Index is a very good tool, not only to understand the general market sentiment, but also to know when to buy and sell. That's because it matches the famous saying, be greedy when others have fear, and be fearful when others are greedy. When this indicator falls to 25 or lower, market sentiment is in extreme fear. If it goes at 75 or higher, then it indicates extreme greed. In this example, you bought BTC on every day the Fear and Greed Index was at or below 15, and you sold all your holdings every time it hit 75 or higher. So how much would you have made? Because the index hit 75 for multiple times over the last 5 years, I split up the investment periods. The first one would have been from February 2018 to May 2019, and in this time frame you would have made 34 purchases, equaling, in our case, $3,400. You would have sold your investments for $5,400, which would equal a return of investment of 61%. In the second period, you would have made 43 purchases, equaling a total investment of $4,300. You would have sold them for about $7,000, which would equal a return of investment of 63%. And in the third period, you would have made 11 purchases equaling $1,100. You would have sold them for closely to $1,500, which would have equaled a return of investment of 36%. To summarize, the performance of this dollar cost average method over multiple years is not bad, but also not great. The total investments needed are considerably higher compared to the other methods. However, the advantage of this method is that the time frame is not very long. Plus, you can reinvest your profits. The fourth, and in my opinion best method to dollar cost average when buying Bitcoin is to buy when the MVRV Z-score enters the green band. The MVRV Z-score helps you to identify when the market value of Bitcoin is too much above or below the realized value. Based on this, you can set your DCA strategy as follows. Accumulate on each day when the Z-score line is inside the green band, and sell all your holdings when the Z-score line enters the red band. In this example, our time frame is only 3.5 years. In this period, you would have made 140 purchases, equaling a total investment of $14,000. You would have sold your holdings for more than $200,000, equaling a return of investment of 1,363%. So to summarize, out of the 4 models I showed to you for dollar cost averaging, the MVRV Z-score appears to represent the best dollar cost average method over the periods that I studied. Surprisingly, over the past 5 years, buying BTC at fixed times, regardless of price, has proven to be the second best practice. If you want to have your investment profits within a shorter time frame, then following the Greed and Fear Index is probably a better strategy. That's it for today. Please leave a like and a follow if you found this video helpful. See you in the next video.